We have Mayuresh Joshi, Head of Equity Research at William O'Neill, joining in. Mayuresh, good to have you on. It's been a last couple of days of very severe reactions to many earnings, and I want to start with Dixon or Cyan, DLM, or some of these other EMS companies where the prices have been damaged anywhere between 6-7% to 12-13%. Yes, valuations have been elevated, but would you use the dip to buy, or do you think this is the beginning of maybe a slightly longer correction?
Absolutely. No, I think on the question of how the run-up of these stocks had been, I think quite spectacular. So I think these stocks had moved 3 times, 4 times over the last year and a half. And therefore, I think valuations in excess of 90 or 100p for most cases within the spaces itself. And therefore, I think any sort of earnings mismatch which probably came through saw knee-jerk and a very sharp reaction as far as prices are concerned. Now, are there tailwinds for the industry as a whole? Absolutely, yes. I think the EMS industry is expected to grow 4 times to around $80 billion from $20 billion where we stand. Plethora of opportunities, including semiconductor as a space that can come their way. ODM, where the margins are relatively higher compared to the OEM work, will definitely push up earnings going forward. But I think the structural breakdown that we've probably seen from a price strength perspective, as we see in MarketSmith India, and valuations still remaining elevated. My own sense is that one should not rush into these stocks even after the correction that we've seen. Let them settle down, let them consolidate, make decent bases at lower levels, and then we'll probably take it.
So any buy ideas? So you've got a few stocks like a Jana SFB reacting well to its numbers. PNB Housing Finance is managing to close up in the green post numbers. But otherwise, most of the reactions, even for decent set of numbers, has been negative.
Absolutely. You're absolutely right. And I think unless the stocks have given an exceptional performance than what the street probably believed in, I think you're going to see reactions like you're seeing in a Jana SFB as an example. But having said that, I think we are clearly going through a downtrend phase as we map our dynamics at William O'Neill India. And therefore, I think a large part of the emerging markets are probably going through this pain point in terms of earnings degrowth, downgrades, which will start coming through, in my opinion, as Q3 plays out. And therefore, I think a combination of this factor along with geopolitics is definitely going to create a huge upheaval as far as forward-looking numbers are concerned for most sectors. Having said that, I think a few sectors over the next few days that will probably keep on our radar. And when we probably see a rally attempt coming through and a follow-through day, I think a few sectors within the broader markets, including and not restricted to agrochemicals as a space. Paradeep phosphate, as an example, has been a clear example within this. Very strong move in terms of how numbers have played out so far, expectations in terms of backward integration that Paradeep is going through, both in terms of its sulfuric and its phosphoric acid additions through internal approvals, and a combination of debt equity has actually come down and margins have expanded. So I think this space with the likes of Paradeep might do well with a very strong EPS rating. Hospitals as a space might continue showing stable earnings growth in our opinion. And therefore stocks like Healthcare Global or Aster DM have shown resilience even in the market fall. And if they keep on posting reasonable numbers and better commentaries, I think this is one space to be in, and very, very selective of BFSI. So I think Tharoor has been something that we're holding for a length of time. A good set of numbers, and I continue to have my thesis that selectively private sector banks within the mid-cap space might actually continue.
Real estate, anything? Stocks have come off. Lodha, Godrej Properties, even Oberoi, DLF. You own any, looking at anything?
So I think we had a couple of names, Oberoi and DLF. So I think we'll take a call post the moves and the numbers on whether to hold on to these stocks in our global portfolios. But again, I think they have played the cycle very well. So like the EMS players, Realty had a good run for the last few quarters. And therefore, I think the next few quarters, in terms of their pre-sales velocity, in terms of them able to hold on to their margins, executing well, they've obviously deleveraged their balance sheet to a large extent. They have adopted an asset-light model, which ensures that they take on projects with a decent gross saleable value without having too much of leverage onto the balance sheet in terms of creating these assets and executing them is a positive. But I think a large part of the markets have now gestated the move. But yeah, I think we continue holding something like a Oberoi or a DLF in our global.
Mayuresh, thank you very much for joining in.